Welcome to Life Happens, where Texans come to protect their legacy and prepare for the second half of life. Join your host, attorney Kim Hegwood with Hegwood Law Group, and our weekly guest as we navigate the challenges that emerge as life happens. Now here's your host, Kim Hegwood.
Good morning. Today on Life Happens, we have a very special guest. This is Jon Karuschkat. Did I say that right? Because it didn't sound right.
That's pretty close. You did good.
And so it's like I keep hearing the story, trying to do the story in my head that you told me. And so I just wanted to make sure. I apologize. Jon is with American Advisors Group. And today we're going to talk about an interesting subject because a lot of seniors are looking for ways to stay at home and pay for care. And a lot of seniors, the biggest thing they have is the equity in their home. So today we're going to talk about reverse mortgages. And so, Jon, can you tell our listeners what exactly is a reverse mortgage?
Okay. Well, a reverse mortgage really is just a loan. That's all that it is. It's just a loan. It's a loan against the property, but it gives you the flexibility of you decide when you want to make payments and if you want to make payments. So payments are not required, but you can make payments. You can pay any amount that you want, whatever you feel comfortable with. Again, it's just a loan against the property. Borrower always owns the property. You always own all the equity that's in the property. That's all belongs to you or to your family. But you're just putting a loan against it and accessing some of the equity that you have in your house. The last statistics that I saw said that seniors, those over 65, has $7.5 trillion tied up in equity. And that's quite literally buried in the backyard because you can't do anything with it.
Okay, well, I hadn't thought about that exactly example. That's funny. And so a lot of people have there seems to be a lot of controversy around reverse mortgages. And so because you hear pros and cons, people either like them or don't like them. And so I really want to make sure that the listeners have a really good idea as far as the benefits of doing it. And I think you said that they're able to access, equity in the home. Do you find that people use all of their equity, or is there, because I've seen, I think maybe once or twice, that the loans were a lot more than the value of the house by the time the people passed. Do you find that very often?
No, there are rules in place that really prevent that from happening. This reverse mortgage has been around since the 80s, and it always had a good concept, but there were some major loopholes in it. There were some loopholes that there were some unscrupulous brokers, and there were some unscrupulous buyers, and frankly, some people got hurt. But it is an FHA loan, and FHA has come in and done something right, and they've made They've made some major changes to the program, and all those changes are for the benefit of the consumer. So it prevents anybody from. They've kind of reduced the amount that somebody can lend. We can't lend the full 100% of the equity of the property. Typically, it's 50 to 60%. It's age specific, so it depends on how old somebody is. And
okay, so you just said something. Let me interrupt you, and I apologize. You said it's age specific. So for listeners, because this is something that I wasn't aware of, if you're older, do you get less money, or how does the age specificity come into play?
Well, you have to be 62 to begin with.
Okay.
And if you're older, you get more money.
Oh, good.
The idea being that you're going to live not as long as somebody that's 80 is not going to live as long as somebody that's 62.
Yeah.
So, and this is a loan that if you don't make any payments, it does accumulate interest, and it does grow each and every month and each and every year. That's kind of what you may have heard, is that some people wind up owing maybe not more than what the property's worth, but they do owe more than what they start out with because it is accumulating interest. And I guess the thought is that those that are 80 or older or whatever are not going to live as long, so it's not going to accumulate as much interest.
Yeah. And so by doing this, how does this help people, age in place?
Basically, they have access to the equity in their house. So they can do whatever they want with it. It's tax-free money, if you will, because it's a loan. It's not an income. So it is money that there's no restrictions as to what you can do with it. And people can access the equity in their house to pay for in-home care, to pay for remodeling the house, or doing whatever you need to do to make it eligible and for people to stay there. I was talking to some people the other day about their placement service putting people in assisted living facilities. And a lot of the people that they're putting in assisted living these days are people that really 6 months ago could have stayed at home, but they didn't get the care that they needed. And now it becomes an emergency thing and they have to go to an assisted living because they have gone downhill so rapidly. Whereas if they'd had in-home care, they could have stayed at home and could enjoy their house. But most people want to stay at home. They don't want to go anyplace. They feel comfortable at home. They feel they know where things are. They know where everything is, and they want to be able to do that. But sometimes we all need a little help, and we need someone to take care of things, even if it's just cooking and cleaning or whatever it is, or health care. We all need somebody. And that's what a reverse mortgage can do, is allow you to access some of that equity to pay for whatever you want to pay for, whatever you need to pay for, without having to make any payments unless you want to.
So when people contact you to say, hey, Jon, I'd like to have a reverse mortgage. And so what kind of factors do you look at to see, whether or not they're, a good fit, or if they are a right candidate for a reverse mortgage?
Well, it used to be that with a reverse mortgage, you just had to be able to sign your name and you're able to get the loan. That's not the case anymore. We do now have to qualify people because taxes and insurance are always something that the individual has to pay. So we have to prove that you have the ability to pay taxes and insurance in homeowners association, if there is one. You have to be able to maintain the property. You have to live in the property as your primary residence. You can't turn it into a rental property. So we have to evaluate that. We don't really care about credit scores. We don't care about debt ratios. We don't really care how somebody pays Sears, but we do care how they paid the mortgage and how they paid their taxes and their insurance and homeowners association. So we have to make sure that they have the ability to stay in the property and meet the requirements.
Do you find that most people are able to do that?
Most people are, and those that are not, there are some provisions that we can use to pay their taxes for, or send them a check each year to pay their taxes and to pay their insurance. It gets a little complicated and gets a little involved and uses up a lot of the equity because we have to project it out for the rest of their life. But that also can be done. We have seen some people that just, this used to be considered to be a have-to loan. It's not a have-to loan anymore. It's more of a financial planning tool. It's a way to people to retire better. But there are still some have-to cases that we deal with.
Do you find that the people that are coming to you are not necessarily, they're not in a crisis situation, they're just starting maybe to decline or starting to think they may need some help? Do you find that it's more of a pre-planning or more of almost a pre-crisis kind of planning when people approach you for reverse mortgage?
Well, we deal with all kinds of people. So there are some people that are in the crisis stage. There are some people that are in the pre-planning stage. There are some people that just want to be able to use the line of credit and to have something available in case the roof goes out or when the air conditioner goes out. So there are people that are in all stages of life. We have some multimillionaires that have used a reverse mortgage to work and to extend their portfolio, to keep cash available and not have to use their portfolio, not have to double dip. But there are a lot of people that don't need any health care right now, but they may in a year or 2 or 3 or whatever. And this is more of a planning tool to take out a reverse mortgage, If you need some cash right now or need some money right now, they can take it out. If not, it stays on the line of credit. Nice thing about the line of credit is that it can never be canceled. Nobody can ever stop it. Nobody can ever call it due. You know, a lot of the banks today, right now, especially during COVID-19, have stopped offering lines of credit. And those that do have them have called in the lines of credit and said, okay, it's now due. That can never happen with a reverse mortgage. So it can always be there, and it's always available to somebody that if they want it.
Well, let me kind of ask you a couple of different questions because they just kind of popped in my head as we were talking about this.
Sure.
You know, interest rates are really low right now. How do interest rates with a reverse mortgage differ from a traditional mortgages right now? Are the interest rates higher, or do they run about the same? How different are they?
They're probably slightly higher right now. For a 30-year fix on a regular mortgage, you can probably get 2 3/4, somewhere in there. We're running about 3.5, so it's just a touch bigger, it's a touch higher. Adjustable rate mortgages are virtually the same as regular mortgages right now. And so it's all set by Wall Street, of course. All mortgages are sold on eventually sold on Wall Street, and it's whatever the market will bear at that point in time. But
well, I know a lot of clients are refinancing right now because the interest rates are so low. Can you refinance a reverse mortgage?
you can, if you have a reverse mortgage, as long as you've had it for at least a year, and it has to meet a certain benefit. In other words, if there's no benefit to the borrower, we can't do it. But if there's a benefit and there's a certain ratio that we have to follow and all kinds of guidelines and rules and whatnot, but if there's a definite benefit to the borrower, we can certainly refinance somebody that took out a reverse mortgage a year ago or 2 years ago or 10 years ago.
Yeah, well, that's good information, because I would imagine that there's people out there that have reverse mortgages that the interest rates are a lot higher than they are now. So
correct.
Do you reach back out to them, your existing clients, or is it something they just have to come to you?
A little of both, actually. So it depends on their circumstances. Obviously, it's always better for someone to call us, and that way we can make sure we're getting taken care of right away, without waiting for who knows how long it takes to get through the system to call them.
So in my practice, because we do, not only do we estate planning and elder law, we do a lot of probate as well. So we run across the reverse mortgages sometimes in probate. And so what happens when, the parents have passed away or grandparents have passed away? How do the kids or the grandkids take care of either buying the house with the reverse mortgage or getting it paid off, things like that? Is that something they're able to do?
Okay. Well, first of all, if the borrower, as long as they're not out of the house for over a year, in other words, if they happen to go into a facility for a short period of time, that's totally acceptable. But if they're out of the house for at least a year, that's when reverse mortgage comes due, if you will. And the heirs, or the kids, let's say the parents have passed away or what have you, the kids have three choices. They can pay off the loan and keep the house. Obviously, they may have to get a different loan, a regular mortgage to pay off the loan. They can sell the house, which of course pays off the loan. Or if they really wanted to, they could give the house to the lender. There have been several times when kids have said, we don't want to deal with this. They've given the house to the lender. The lender, by law, can only keep what's owed on the property. So the lender has sold the property, paid off the loan, and sent a check back to the kids.
Oh, that's nice.
So all the equity always belongs to the family, or to the heirs, or to the borrower. There is no prepayment penalty. The borrowers can always sell it anytime they want. They can turn around next year and do whatever they want to, and so it's just a loan. It's just a loan like any other loan, and you can pay it off anytime you want. Make payments anytime you want.
Now, this is an area that you've kind of transitioned to. Is that correct? Did I understand that?
I've been in the mortgage business for about 30 years.
Mm-hmm.
The last 3 years, I've been in the reverse field. Actually, when I was an independent broker, and reverse mortgage would walk in the door at one point in time, and the first one that I did, I did a terrible job. I did. I messed it up, and I said, I'm never going to do that again. I referred it off to somebody else from there on out. A couple of years ago, I wanted to make a transition in my life, wanted to make a change, and I enjoy dealing with seniors. They like to talk to people, and I like to talk to people, and it's nice solving problems. So yes, 3 years ago I changed over to reverse mortgage. It's an FHA loan, so any company that does FHA loans can do a reverse mortgage. However, I was talking to a customer that had been in process with another company, just their regular mortgage guy. Been in process for 6 months and still nothing was happening, and they were asking for all kinds of things and doing all kinds of things, and we took care of it and we got it done in 45 days. It's it's a very specific loan, and if you don't have the experience, then yes, like I said, anybody can do it, but at AAG, that is our main concentration. That's what we do. We have systems in place. We know how to get things done. We know how to make it happen. We know how to make it. Mortgages today are not easy. They're very stressful, and we're going to put people through a lot of stress. I'm sorry, we're going to do that, but we're going to limit the stress as much as we can with AAG because we have systems in place.
Yeah. And so, well, that's good in that aspect of it. So I agree with you. I have a lot of seniors that come in, and I tell people all the time that, I miss my grandparents. So hanging out with somebody else's grandparents is just the best thing. They, 99.9% of them are raised very well. They have stories that are just fun and amazing. And so hanging out with seniors is always a whole lot of fun.
It is.
I know my mom's a lot of fun. So it's always good. So, Jon, tell people how they can find you. If they're looking for a reverse mortgage, want some more information, can you tell them how they can find you?
We can always go to the website that just popped up there. That's my own personal website. It talks a little bit about me, and then, of course, there's a way that you can enter information and I can contact you. They certainly can call my phone number. My office phone these days is transferred to my cell phone, and so you can see it's a Colorado cell phone, but don't worry about that. I'm here in Houston area. And because of the COVID-19, my office phone is just transferred there. It's easy just to call that number.
Well, that's good. For people that are listening, it's 720-289-7484. Is that correct?
That is correct.
All right.
Worst comes to worst, you could always call AAG themselves and say, "Oh, that Jon with that funny last name," and they'll connect me.
That's funny that if they can call the number, they know exactly who you are. And so, right. Most definitely. So, and Jon, I sure appreciate you being on the show. I know a lot of people have questions about reverse mortgages, and we see it a lot in my practice. So most definitely, we thank you so very much, and we look forward to having you on again at a future time.
Kim, thank you very much. I enjoyed it, and I would love to visit with you again. So, thank you.
Thanks, hon.
Thanks for tuning in to this week's episode of Life Happens with Kim Hegwood. Be sure to tune in every Thursday at 10 a.m. wherever you listen to your podcast as we navigate through the challenges that emerge as life happens. The content of this podcast does not establish an attorney-client relationship or constitute attorney-client privilege, legal, medical, financial, or any other professional advice.